Donna, Virginie, how are things going? What's the current status of the relationship between the UK and the EU when it comes to financial services?
The dialogue seems to have resumed, which is actually very encouraging. There is, discussion now between policymakers and regulators. So I think from an industry perspective, it's a very positive development because the message we deliver to one policymaker, whereas they are in the EU or the UK, is exactly the same.
I think that's right. And I think both in the UK and in the EU, the policymakers have very much engaged with the industry and are consulting with them regularly in relation to the reforms. And so whilst we've seen some divergence in terms of the rule sets between the UK and EU, we've actually seen quite a lot of convergence as well in various areas and top reform priorities for both the EU and the UK being the same. For example, consolidated tape, simplification of the listing rules, focuses on capital markets union and diversifying capital bases for corporates in the UK and the EU by different sources of funding. So we do find that the dialogue is open and we're seeing similar priorities in both regions.
Obviously here at Citadel, we're big fans of competition and innovation. Are the UK and the EU, are they competing with each other and innovating, or is it a race to the bottom, or are they improving things in each place?
I think it's a healthy amount of competition between the two regions, but with both policymakers really looking at the current rule sets that are in place and actually evaluating, are they fit for purpose? Are they doing what they were intended to do in the first place when they were adopted, and looking to make improvements and incremental changes in order to improve overall the markets generally.
And Virginie, is that leading to convergence or divergence? What's the trend?
I think it's leading to convergence, and the UK and the EU work together also at a global level together with organizations like IOSCO or the FSB. And I think it's important because the trading is becoming global. Investors, issuers, look at the world. So competition doesn't stop at the borders either of the EU or the UK. It's everywhere. Investors and issuers, they have a choice today. And to be honest, the US and APAC have done an amazing job at, reinventing themselves. So making themselves very attractive also to all these market participants. So it's not really the UK versus the EU. It's really a global competition now that is at stake.
The topic of clearing comes up a lot. I think there's a concern perhaps among EU policymakers that too much clearing of EU-denominated assets occurs in London. Is that an issue that is going to be resolved anytime soon?
I'm not sure if it will be resolved anytime soon, but it is something that we expect to be on the table for still quite a while.
That's definitely the underlying topic under the EMEA review in Europe. The idea is really to move back the clearing of euro-denominated of certain derivatives products, to the EU. And I think there is a concern it might take a while to fix.
Now, globally, a central topic of conversation in many markets has been settlement cycles, and particularly shortening settlement cycles. In North America, we actually have the US and Canada both moving from T+2 to T+1 on the same weekend. Should we expect that level of cooperation and coordination when it comes to the settlement cycle reform in the UK and the EU?
We were a bit late even discussing it in the first place. The UK started, in 2022 with their, task force appointed by the government. The EU just started with ESMA consulting and asking the market, what do you want to do? What are you ready to do? Do you want to move into T+1? They even mentioned T+0. So the question is now on the table. I think that there is also the concern of if the UK moves first, versus the EU, because what we have today is a lot of common instruments that we are trading between the UK and the EU. And if the UK was to move first, that would be a very difficult thing to manage, I guess, for the EU. We don't have that many instruments in common with the US, so the impact, might be in a way quite limited. But certainly, if one of the two regions, either UK or EU, was to move independently, that would be an issue.
I'd be interested to hear, Stephen, your view on what prompted the US and Canada to shorten to T+1. What was the key driver there?
I think the primary driver was that if you have a shorter settlement cycle, you reduce what's called the margin period of risk that the clearinghouse has to collateralize for. So when you have a shorter window on the settlement side, it allows for a more optimal use of capital in the markets because you don't have to commit as much margin to sort of guarantee the risk during that window. And at the same time, I think the investments you have to make in straight-through processing and automation to support a shorter settlement cycle inevitably lead to lower operational risk in the system.
Yeah.
So it was viewed as a relatively common sense reform and a natural progression from the earlier move from T+3 to T+2.
Makes sense.
And I think that those same core benefits will accrue in other markets as well as they also take steps to shorten their settlement cycles. So I think it's a important direction of travel, not just in the US, but in the EU and the UK as well.
And I think maybe looking at the bigger picture from an EU and UK standpoint, most of our markets are electronic these days, but the post-trade area has been maybe a bit ignored. So it's good, at least as an industry, that we are questioning the length of the settlement cycle and make sure that we're happy with whichever outcome we decide to go for.
I think that's right, but it also highlights between the EU and the UK the interconnectedness of the markets. Difficult to see them in isolation because many of the same instruments are traded in both markets, and therefore that's why we can see from a shortening of the settlement cycle that we would likely move at the same time, the EU and the UK together in this space.